Hello and welcome viewers. ITC, one of the biggest FMCG giants of our country, is all set to demerge its hotel business through ITC Hotels on the Indian exchanges, and I'm now being joined by Sajid Manghad, who tracks his company very closely and is going to answer all your questions. In fact, our viewers also sent us a couple of questions on this biggest demerger that 2025 is going to see right into the entry point. And if you could simply explain what is going to happen in the special trading session, what are some things that viewers should keep in mind on that day?
So this is a special trading session that happens for any demerger that is happening on the stock exchanges. What does it do? It basically separates the book value or the intrinsic value of that asset which is getting demerged, and that demerger gets reflected in the price of the stock. In the case of ITC is part of the Sensex and the Nifty, which are the benchmark indices, and so there's a slightly different special opening session that is going to happen here. On January 6th, when the stock goes X date, there is a session which will be held between 9 a.m. and 10 a.m. in which the equilibrium price or intrinsic price of ITC Hotels will be discovered through the stock exchange platform. Investors will do is that they will ascribe a value to that asset which is getting demerged from ITC, and as a result of which both the stocks will continue to stay listed, but it will not, ITC Hotels will not trade, ITC will continue to trade after 10 a.m. and that's what is going to happen. And since ITC is part of the index, both the stocks will be there. It will be just like add-on stock in the Nifty. So Nifty will have 51 stocks, the Sensex will have 31 stocks till the time the shares of ITC Hotels are credited to the demat accounts of investors and they start trading, and then there's a process to exit the indices as well, which is there, and that's one of the reasons.
So we understand that ITC Hotels will be a part of the index as a dominant company, but what is more important to address here is that when will it exit? So Sajid, please tell us, when will it exit the index?
When will it go out of the index? It will go out of the index as soon as you have the trading of ITC Hotels. That will happen once the shares are credited to your account. As per regulation, within 60 days of approval, the shares have to be credited to the account of the shareholders. So if you look at December 16 was the day when they got the approval. So within 60 days, the shares ITC will transfer the shares of ITC Hotels to the account holders so that they can trade on the account. The trading is also a little complex in that sense, because what the exchanges will do is that it will allow free flow of buy and sell of ITC shares. The regulation says very clearly that they have to remain in the index for 3 days. If on the first 2 days the ITC Hotels hits a circuit, whether it's upper circuit or the lower circuit, then on the third day exchanges will extend the trading by another 3 days till the time there are no upper circuits in the stock. It's one of the way to determine the value of ITC Hotels, which is happening. If after extension there are 2 days when you have no upper circuits or lower circuits in ITC Hotels, then what will happen, even if the stock hits the upper circuit on the third day, it will go off the index on that day.
Okay.
So the extension of continuous trading as part of the index will continue till the time there is continuous upper circuit or lower circuit on ITC Hotels. Once it stops for 2 days, it will go off the index and it will trade as a separate company like any other company which is trading on the stock exchanges.
Okay. And I think another question that we've gotten, and you should perhaps also give some clarity on this. Now, ITC Hotels is demerging from ITC on the stock exchanges and will be listed separately. But what happens to the shareholders of the parent company ITC? Suppose if ITC profits tomorrow, will this profit extend to ITC Hotels as well, or they're going to be two separately different things?
So yes, there will be a bit of from a financial point of view how it's going to be. I'll tell you. ITC will have 40% stake in ITC Hotels after the demerger happens. The remaining 60% will be held by the shareholders of ITC. So from a shareholders point of view, they will continue to trade in ITC shares like they have today. If you are holding shares as of Jan of 6th, then you will get shares of ITC Hotels, and that also you can trade.
Okay, great. And another question that we've gotten is from a viewer who's asking, what could be the potential range bound in which ITC hotels would be trading, because the sector is going through an uptrend at the moment?
True, it's a very tricky question, and I'll put it in two parts. The first part is when we are going to determine the equilibrium price or the demerger price, which is there, which is going to happen on January 6th, which will be based on the asset value or the book value of ITC hotels in the entire balance sheet of ITC. That based on the net worth which is available as of September 30th, 2024, that's little about 7,500 odd crores, and the kind of equity that we have, it gives us somewhere around 37 rupees or so. That will be the equilibrium value, but that is only the base value which can be used by investors. If tomorrow you are going to sell ITC hotel share, then the cost price for you becomes that price for you, because that becomes a book value per share for ITC hotels going forward. The second thing is the value ascribed to ITC hotels when it starts trading itself. That depends upon a lot of factors. One, the kind of financial growth that they are going to see. Two, the kind of investor interest that comes into play, the kind of liquidity that comes into play, and the demand for those shares which is going to be which is coming into play. Today, hotels are getting a valuation of 45 to 75 times depending upon the company that you choose. And even if you take a conservative approach of say 40 times FY26 price to earnings ratio, it gets the calculation is very simple, that you have a 3.4 rupee EPS, and then you are multiplying it that by the 40p, you're looking at roughly around 130 rupees or so. That's a base value. But because it's a hospitality asset, markets also look at EV by EBITDA as well, and there companies like Indian Hotels are trading at 26 times EV by EBITDA for FY26. So if you put that into perspective, then you're looking at a price value of 170 rupees per share or so.
And one of our viewers, I suppose he holds 11 shares of ITC, and he's asking how will these 11 shares get affected after the demerger?
So there are two things here. One, for every 10 ITC share, you will get one ITC hotel shares. So what happens to the one ITC additional share that you are holding? That becomes a fractional share for which the company will pay you money, which will gets credited to your bank account. So fractional shares, you will not get a fractional share of ITC hotel. You will basically, that 1/10th price, whatever the price is discovered, the company will calculate all the fractional shares, they will sell it in the market, and then they will credit the amount to your bank account, which is linked to the demat account. So the fractional share amount will come as a money to you. For the 10 shares that you hold in ITC, you will get one share of ITC Hotel.
Oh, very well said. A couple of last questions. One of our viewers is asking, will buying the stock on the 6th of January make him eligible for ITC hotels or not?
No. You need to hold the stock of ITC on the 6th to be eligible to get ITC hotels. That's why I said the last date for holding to get ITC hotel shares in your demat is Jan 3rd, because we follow a T+1 settlement. So if you buy on the 3rd, which is a Friday, then the shares will be credited to your account on Monday, which is Jan 6th. So your account already has ITC shares in that sense. So you will be eligible to get ITC hotel shares then.
Okay. And another viewer has written to us asking, what happens to the CE options?
Well, CE options for the uninitiated is basically call options, which we are talking about here. What is going to happen is that the stock exchanges have come out with a notification which said that because ITC is a part of index, whether Sensex or Nifty, there is a FNO on futures and options on ITC stock. all the contracts of ITC which are in FNO will get expired at the end of Jan 3rd. What happens to the FNO for ITC going forward? On Jan 6th, what will happen is that once the special pre-open session is over and the equilibrium has been determined, there are fresh contracts which will be released by the stock exchange, wherein you will be able to trade in the call option which are adjusted for the price of demerger. So, to give an example, if ITC is at 500 and the equilibrium price is say 50 rupees, and it's just an example, then on 6th after 10 o'clock when the trading begins, ITC price will be 450 rupees and all the options will be based on that price range which will be there. So, the fresh option strikes will be released based on the equilibrium price, and by end of Jan 3rd EOD or end of the day, the stock exchanges will give out a reasonable guidance of what is the range of the strikes which will be available for ITC to trade on Jan 6 after 10 am.
Right. Thank you so much, Sajid, for joining us and giving answers to all those questions. And viewers, I hope we were able to answer all your questions on this particular demerger. And if you still have any doubts, you can write to us in the comments below and we'll reach out, we'll make another video and perhaps get Sajid to answer all your questions. So thank you so much for joining and keep watching NDTV Profit.